Hi everyone, hope you're all doing well, and today I'm going to do a bit of a response video to the video that I last put up. So the last video I put up was talking about the stock market, particularly growth stocks, and growth stocks really struggling, particularly over the last 3 months. And a lot of them growth stocks have really been hit hard. A lot of them growth stocks have lost 30, 40, 50, even potentially more of their market cap value in the last 3 months basically, which has been built up across 2021, but especially the 3 months just poof, it got pretty much a lot worse in them last 3 months. And yesterday the video response really surprised me. The big surprise to me was the amount of fear and negativity that was out there. I was really taken back with how much, looking through the comments, how much fear and negativity there is out there to the growth stocks right now. And that says a lot to me, you know, as someone that makes stock market content 5 days a week, something I would say around about 1 million views-ish a year at the moment. I get quite a good idea of what a lot of retail investors are thinking. When the euphoria was happening and growth stocks were going up to 52 highs and kept going up, you kind of see the amount of greed that was there. People that just want more and more and are just getting carried away. They're happy with their accounts going up, and that little bit more of that risk being taken of going, oh, what's the point of having this stock? You might as well go for this really high spec stock that can go up 100% in one day. And you see the amount of greed that's in there. And now that we've completely reversed, and you're seeing the amount of fear that's out there, and because growth stocks are no longer at 52 highs, they're at 52 close, you see the opposite now of going, oh, well, I've given up on this stock. I don't like this stock. Oh, it's a terrible stock. And the complete change of attitude to a few certain stocks really surprised me, and kind of gives me a good understanding where a lot of people are with the stock market now. A lot of people with growth stocks have got to the point where they are just fed up. There's so much fear out there, there's so much negativity out there, and yeah, there was a lot to go through in the comment section. Like I said, it really surprised me, so I thought what I'd do is kind of do a bit of a response to that video there, talking about that. Now, funny enough, since I've made that video and talked about stocks being off 52, hitting 52 close, we've actually had a bit of a rebound in the stock market. On that day, they did bounce up a little bit, and then going forward, there's been a little bit bounce in there, so I don't know, it might be another dead cat bounce, but at the moment, there's a little bit of a rebound going on. But anyway, going to more of a longer term point of view, we don't know if this is the low, and they might carry on going lower. We don't know. All we can do is position ourselves for the long term, look for great companies that will be successful over the long period of time, and if they are successful, the share price will reflect that. But this is my first point, is that it is really interesting. For me, these are the best times for me. I really enjoy the stock market going down. I would rather prefer the stock market to go down rather than going up. Now, a few people are like, what? Why is that? For me personally, I like the stocks going down, because when stocks go down, you get great businesses at very cheap valuations. So the lower they keep going, the more you look at companies and go, look at that company at that sort of valuation, and you start running numbers on them. You start running numbers on where they're going to be in 3, 4, 5 years, and you're like, wow, that I'm paying that valuation for this company and what they're going to do, the growth they're going to do, the profit they're going to do, the TAM that's out there for them, the moat they have. It's a really exciting time, because for me personally, as an individual stock picker, I look at a few individual stocks here and I go, this is absolutely amazing. I prefer this, because the one thing that I hate doing is just seeing stock markets that just get carried away and go on crazy runs. Because you try buy a position and all you have is the stock going up and up and up, and you just have to average up all the time, which is an absolute nightmare. And the more you kind of get stretched away from the correct valuations, you will have that snapback eventually to the correct valuations, which we pretty much have right now. The valuations got stretched and it's snapped back. You can argue now that some of the valuations are incredibly undervalued. They've snapped back that much, but that's what ideally I like to do. I like to see stocks at cheaper valuations. That's where you make more money. You look at any of you guys that went through the March 2020 dip. If you were in it beforehand, you saw the dip and you bought in that opportunity, you're probably doing quite well from buying some of them stocks. So for me personally, I love it. But the problem is that a few people aren't used to this. A few people struggle with the stock market. Now, if you look at the stock market is a great way to build wealth and buy great investments that bring you great returns in. And if you say that, you'd think, well, why doesn't everyone do it? The reason why everyone doesn't do it, or why a lot of people are more just suited to kind of go into an index and putting money in an index, is because of these times. The stock market is just so easy. If you invested in the stock market after April, May 2020, all you've seen is a stock market that goes up and up and up and up. There is times where the stock market will dip. there's times where stocks will lose a lot of value. Stocks have that little bit of a risky element because they are assets that can literally lose 30% in a couple of days. There's not many investments out there that have that risk. And that's why stocks have that risk and that volatility, but also have amazing upside as well. But people always forget about that risk and that volatility. And I think especially over the last kind of few months, a lot of people have been really taken back by, wow, I actually didn't think that happened. I wasn't really prepared to see an investment I made and then see that investment go down 30%. And it's taken a lot of people by surprise. And I think because people aren't used to that or haven't had a period of time where you've seen stocks slowly downtrend, lower every day, I think a few people have been shocked by that. And because they're shocked by that, they don't know what to do. They're looking at it going, it just keeps going lower. I keep buying it, it just goes lower. It's going, I'm buying it 80, it's 70, it's 60. And at first people are a little bit calm about it, but because it keeps happening, there's that little uncertainty, that doubt, that fear starting to creep in, and people start to panic going, I'm a little bit worried now, what do I do with these investments? And people that haven't really maybe had that experience and just jumped into growth stocks, because obviously those are the stocks that bring in, better returns than any other stocks, but they also have the volatility, the downside more than the other stocks, and maybe they jump straight in the deep end and they've not really seen any dips before, and they're looking at that now and it's really taken them by surprise. And I thought that was very clear in the comment section, especially from yesterday's video, the reaction of the amount of people that have kind of got a bit of fear about them now, seeing these stocks go on this tumble. And I think one thing that is quite unique about my channel is that I try and be quite open, I try and be transparent about on the channel about things. I'll try and say, oh, this is my stock, this is why I think it's going to go up, these are the reasons why, and I basically just try and share different ideas about stocks that I own on the channel. And even though that is great, I think that also has a couple of downfalls that I'm so open about it, because it would be very easy for me to just make a YouTube channel going, oh, this app is trading 212, this is what you do, and be quite decent at it, I guess, and just kind of talk about general finance, go, oh, you can open up an ISA with free trade, and I could easily make videos like that. But to make videos talking about actual individual stocks, and these videos are always keep on record, they're always, you can always go back to what I said about a certain stock like 2 years ago and go, oh, this is what I said about a stock 2 years ago and this is how it played out. You can always go through that. There's always that risk element that a lot of people are kind of watching YouTube videos, kind of like if they make a mistake or they got an investment they don't like, you kind of get rid of it. You don't really have that kind of follow-up of someone kind of going, oh, what about this and this and this? Whereas for me, like, every single investment I make basically is open and everyone can like judge my investments and what's going on right now. So that kind of leaves it a little bit open from that point of view. And as well, because I'm quite consistent on updating, like, oh, this is my stock, this is where I see it going. It's not really like a hype channel that hype something up and then go, okay, that's not popular anymore, I'm just going to sell that out in the background. Or a stock that's not successful, I'm not going to talk about that anymore, I'm going to sell it in the background. Talking like a stock, like DraftKings, for example, talk about DraftKings and then still talking about it when it's down 10%, 20%, 30%, 40%. I think it's pretty unique. You don't see many other channels out there that own stocks and then keep updating and saying that they're still a strong believer in their investments. It's quite rare to see that, I guess, on this sort of scene. And the big thing as well is, like, when you are talking about individual stocks, then you get tied with them stocks, and quite often, I don't know what it is really, it's a bit strange really, but even though you can claim, so for me personally, like, all my investments I plan out for like a 2 to 5 year hold, but the amount of times you will get judged off that investment within like how it's done that month is unbelievable. Like, the amount of times that you say, like, I can buy a stock and if that stock does absolutely amazing, everyone's like, oh, look, that stock, it's absolutely amazing. If it's had a good month, everyone's like, oh, it's amazing. But at the same time, there's a lot of people that are judging stocks that if they go down a month, then they're like, oh, that's a terrible stock, it's down this month. And it's like, well, the only time it's going to matter to me is when I click the sell button, and then if I take profit from it or if it's a loss, that's when I'm going to judge that investment from. And I think a few people are claiming to be long-term investors, but they're getting quite active and making a lot of rash and quick decisions, and that's one of your worst enemies. You're not going to be a very successful long-term investor if you're actively deciding if that's a good stock, a bad stock, buying, selling, you're probably not going to do that well. You've got to come up with, okay, these are the reasons why it's going to do well. These are the financials in long term, and that's where the share price will go. And if you're a long-term investor, you leave it and you see if it works out. And that's the big thing of being a long-term investor, but there's a lot of people out there that aren't really doing that right now. And the big thing as well is I think it's quite clear that people have been recently buying stocks that they don't understand, or maybe see me talk about stocks they don't understand. They buy stocks and they don't really understand why they're buying it. They don't know why that stock is going to go up in value in the next few years. And then when that stock has a poor run, if it drops, if it goes down, then people panic because they have no belief, they have no understanding why they bought that stock. And that's one of the main errors that a lot of people have been making. People have been buying stocks and then not realizing if it goes down, you understand why you bought in it. Has the company changed? Has the vision of what you see happening changed? And I think a few people bought them stocks and then didn't really have a vision of what they wanted from it. And obviously, within general, there's always going to be people, there's probably 5% of the people that do turn on to watch a video, and the whole reason is because they like seeing people fail, I guess. And that's the big thing. There's a lot of people out there that you've always got to be careful of, that are pushing agendas, that are being negative, because they enjoy it. It's a really weird place why someone wants to wake up and generally just be negative on a lot of things, or you go, start talking about stocks negatively, or maybe they've got a financial interest, I don't know. But you've got to be careful, because what's been really obvious right now is, that a lot of people that have been very quiet the last 24 months have suddenly started piping up and going, oh, look at this, it's terrible, or look at this stock, it's terrible. And the reason why is because they're reacting off the share price going down in 3 months. You got to remember, these people weren't around 24 months ago. There's a reason why they've been quiet for 24 months. And you got to remember that people are always the loudest being negative when stocks are right down. When they're up, you don't hear them. And that's obviously something as well that you got to take into consideration. And as well, I think as well, if you're certainly tied with certain stocks as well, you've got to be really careful, because I think when people see stocks go down, like, they need something to blame. Like, they can't just accept that the stock market's the stock market. Sometimes the stock market will go up, sometimes the stock market will go down. But in the long term, if you're buying solid companies, they'll do well. But I think when sometimes some people get quite emotional and see a stock go down, as well as that, I think they need someone or something to blame. The amount of times I've seen a stock fall off a cliff, and next thing you know, on Yahoo Finance, people are on there going, get rid of that CEO, he's terrible, even though that CEO's turned them from a company that was worth nothing to a 10 billion company, is unbelievable. So you've also got the emotional side of it from that point of view. As well as that, that's something you've got to accept. Sometimes, when stocks go up, everyone worships as you and going, oh, absolutely amazing, this stock's gone up. Same when it goes down. You've also got to be careful that, people are like, oh, you're absolutely terrible, this stock's down. It's part of the game, really, that, when you are in a position like myself, you have to accept that. That's what's going to happen. People are generally going to react if things are up in a positive way, if things are down in a negative way. And the thing as well is, what has really surprised me, or the big thing that I've seen, is that when things go absolutely bonkers and goes up, people do stupid things. When we saw the stock market go absolutely crazy in the last few months, we saw people doing crazy things like buying penny stocks that had no product, or companies that had no product, or were going to magically win contracts. We saw all that happening. And the same happens when stocks go down. When stocks go down and people start reacting off that, you start seeing people do really stupid things and start making stupid decisions. That's what happens. That's the big thing. As a long-term investor, you have to basically take a lot of emotion out of investments. And that was another thing that I saw yesterday, is the amount of people that are now making stupid decisions because they are making emotional decisions. I saw someone in particular yesterday saying, oh, the way forward to manage this is to put like stop losses every time your stock goes down 10%. I thought, that's one of the most stupid comments I've ever got. To have a stop loss on if your stock goes down 10% would be bonkers. You'd lose so much money. You'd more than likely lose probably half your money straight away, because the chances of you buying a stock and going up or down is 50-50. So if you're in a bull market, more than likely it'll probably go up if you buy it. If you're in a bear market, it's probably going to go down. And an individual stock can move 10% in one day. So you could buy your stock, next day, boom, closed. You've lost a position. It's gone down 10%. It's done. That's absolutely stupid. As a long-term investor, to use stop losses is so stupid. It's so stupid. You will be a really unsuccessful long-term investor. If you love a company and you're a long-term investor, to see your stock go down 10%, you should be like, oh, okay, I like this company, it's now 10% cheaper, maybe I should pick up a few more shares. This is another opportunity to get it at a cheaper valuation. Otherwise, if you're doing a 10% stop loss, that would be absolutely stupid. You would be a really bad long-term investor. So, 3 examples here. 3 of my better return stocks in the last 12 months. So I sold half my Greg's position for 100% return. I sold GWPH because they got bought out last year for 100% return, and Tesla, which was just short of 100% return. So these 3 stocks are here were 100% return stocks, and that's what I aim for. I aim to get 100% return in 2 to 5 years. 3 really good stocks for me that I sold for really good profit over the last 12 months. With Greg's, bought Greg's, made 100%. What happened when I bought it? Greg's went down 30%. If I used a stop loss, that would have been it. Game over. But what did I do? Knew it was a great company, bought shares, brought my average down, came back in favour, made good money. GWPH, same again. Great stock. Stock went down 30%. I think it was even down maybe even more than that at the peak. Down 30%. Knew it was a great company. Averaged in, went up, boom, bought out, 100% return. Tesla. Now Tesla was generally just went up on a really good run and not too much controversy there. But when I first owned Tesla in 2019, so much negativity out there. Oh, they can't mass produce cars, or they've got problems, or they're going bankrupt, they can't make profit, or they're getting investigated by the SEC, their factory's on fire. There were so many problems. Tesla down 30% in 2009. I was down 30% on Tesla in 2019. What happened to the stock? It's up over 1,500% or something right now. I can't even remember. It's up a lot. Let's say that. And once again, if you don't have belief in your companies, you will have companies as a long-term investor that will go down. But it's looking at the long-term vision. I looked at the long-term vision of 3 of these companies here that in the last 12 months have made 100% plus return on them, and all of them came from conviction, buying on dips, not panicking, knowing your investments. And yeah, just a bit of a roundup yesterday and a bit of a response video, because I was really surprised to see that much negativity out there in general to most of the stock market. I would say that generally, there was, I would say 50% of the people watching the video were like, oh, yeah, it's part of the game. But I'd say 45% of the people that watched the video yesterday were really fearful and negative on the stock market. And generally, I would say there was a bit of I would say probably 5% of the people that were generally negative towards me as well. So I felt like that was probably worth a response to that. So hopefully that clears that up. And yeah, just a few points I wanted to touch on. So yeah, hope you enjoyed the video anyway. Tomorrow I should get around to actually talking about the stock that I bought last week at last. So hope it was useful. If you could hit like button if you're new, subscribe, and I'll see you next video.